Today, I'm sharing some quick updates on stock market performance and cryptocurrencies, along with 2024 retirement planning updates. I'm Roth DeLegge with ETF Guide, and it's so good to see all of you again. So let's get right to it. Beginning with a wonderful announcement that I'm so pleased to make. Besides YouTube, Roku, and Amazon Fire TV, you can now watch this channel on Apple TV. Just download the app. That's the ETF Guide app. Once you're inside Apple TV, and binge watch at your leisure. And again, my team and myself have been working on this behind the scenes for a number of months to make this happen. And I'm so pleased that you can now watch this channel on Apple TV. So be sure to check it out. Let me know what you think. Also, we added 2 new playlists. We just added Directions playlist, which is focused on educating you about ETFs that help you express your viewpoint, whether that's bullish or bearish. And you can do that with 2x or 3x daily leverage, along with ETFs that use no leverage. Plus, we've got a new playlist from USCF Investments. This is a playlist all about investing in commodities. And as most of you know, I've harped on this for the past couple of years. This is a major asset class that most investment portfolios are underrepresented to. And we're trying to change that. So be sure to check out both of these playlists. You probably have already seen some of the content starting to flow, and you will see more. It's designed to help you get ahead and stay ahead. Also, another program, this is a new original series called Shifting Energy, which is sponsored by Sprott ETFs. I don't know if you've noticed, or if most of us, if we're just being observant and looking around, and paying attention, there's a major energy transition that's now underway globally. And this particular show is going to tell you about the ETF investment opportunities within the commodity space that are benefiting and that are poised to benefit from this mega investment trend. So be on the watch for Shifting Energy. We'll be dropping new episodes every single month. Stay tuned. Let's take a look at ETFs tracking major asset classes. These are the 2024 performance leaders. As you can see here, we've got U.S. stocks, SPY, tracking the SP 500, along with FBTC, that's the Fidelity Spot Bitcoin ETF, which, as you can see in this chart, it bottomed in late January. We've got that highlighted in the yellow. And then since then, it's been a rocket ship up. So what is behind this surge in Bitcoin? And I would not consider myself a maximalist or maximist or whatever they call themselves. I do respect it, though. I mean, you have to respect any asset that's the fastest in history to make it to a $1 trillion market cap. I mean, let's have some respect, people. And so the surge behind Bitcoin, well, one of the major catalysts is the next Bitcoin halving, which is estimated to take place on April 19th of 2024. It will reduce the block reward to 3.125 Bitcoins. This April 19th date, by the way, is based on current estimates. It could change in the future, but that's what it is right now. And the past few times Bitcoin has halved, its prices have surged 3 to 4 times higher. I'm not saying that's going to happen again this year or this time, but history has a knack for rhyming. Here's a geographic look at what's going on in the global stock market. And as you can see here, we've got the U.S. and Japan as leaders. Meanwhile, these emerging market countries like Latin America, as well as Brazil and China, are all lagging. I think what jumps out to me on this chart when I look at it, or this graph, is how China is down, yet you'll notice the rest of Asia. You've got India up, INDY. You've got VPL, Asia up. You've got Japan up. So what this tells me is that, listen, Asia, the growth story is happening despite China's funk. It will happen and is happening. And this is very, very telling of how market sentiment in Asia has dramatically changed. It's no longer reliant or waiting for China to surge. Now, in terms of S&P 500 industry sector performance, we've got 11 industry groups. You've got 9 up. Just 2 are down, and they're down modestly. You could see the top three there: XLC, Communication Services. Meta Platforms has been a leader within that sector. We're going to talk about that stock in a second. You've got XLV, Healthcare, and then XLK, Technology. Those are the top three. And then at the very bottom, you've got some of those industry sectors lagging, like XLU, which is utilities, and real estate, XLRE. Of course, both very sensitive to elevated interest rates. Now, if we take a look at this next graph, this shows you the best and worst stocks of 2024. This was a pretty cool chart, courtesy of Charlie Balello. And you'll notice that the top performers, you've got companies like Nvidia and Meta Platforms. And then if we look at some of the bottom performers, Tesla is among that group. Now, let's chart those particular companies. These are ETFs that are linked to those individual stocks, but with leverage. And I've charted them here. This is the 2024 performance. And you can see that these single stock ETFs linked to Nvidia, Meta Platforms, and Tesla have been big movers. And you can see here that keep in mind that they use daily leverage. So what they're trying to do is amplify the exposure to these individual stocks. And that's been great for bulls of Nvidia and also Meta Platforms. You can see these two ETFs have been strong performers. And then what about bears? Well, there haven't been many bear opportunities per se in 2024. And one of the few places, I guess you might say, has been Tesla. Tesla's been an underperformer, and TSLS aims for daily opposite exposure to Tesla, meaning that it's designed to go up in value when Tesla's stock price falls. And that's what's been happening here in 2024. So TSLS has been a good performer. Heads up that there's going to be some changes coming up in April. There's going to be 6 ETFs. These are single stock ETFs that use daily leverage linked to companies like Amazon and Apple and Microsoft and Nvidia, as well as Tesla. They're going to be moving their leverage points from 1.5% daily leverage to 2x. And that, again, happens in April. So stay tuned for that. It's coming. Now, who is the big money and how did they become so big? Well, this table tells us the answer. Did you notice what industries where 9 out of the top 15 billionaires made their fortunes? That's right. It's in the technology sector. And it's instructive for those of us who are paying attention to all of this, who are smart enough to notice that by simply orientating your investment portfolio to emphasize industry groups like technology that are benefiting the most from all of these movements like artificial intelligence, cloud computing, cybersecurity, digital currencies, and so forth, all these technological revolutions, they're unfolding right before our eyes and they're creating tremendous wealth. This next chart looks at, well, what if you would have emphasized this in your investment portfolio? What difference would that have made in terms of performance? This is a 15-year performance chart. And of course, you know, history is just that. It doesn't really tell us that it will necessarily happen like that in the future. But if you take a look at the 15-year performance, this charts it. These are some ETFs with heavy exposure to technology stocks like the triple Qs, along with XLK. You also have the 3X daily leveraged ETF to tech, that's TECL. They just dominated performance-wise compared to the conventional S&P 500 ETF, SPY. And keep in mind that as good as that is, technology can go through long periods of underperformance. I mean, it did that for 10 years from 2000 to 2010. It was an absolute stinker. So you can have sometimes those periods of underperformance, but my point is that it doesn't always necessarily outperform. But my point is this, is if you can manage to stay the course for the full growth cycle, if you can do that, and most people can't, but if you can do that, my point is that good things can come to those who patiently wait. And I think that these numbers bear that out. These are pretty incredible numbers, by the way. TECL, 39,000%. Obviously, though, there's been some really high peaks and some really low valleys. I mean, if you take a look at some of the market corrections, we had that, of course, in 2020, and then, of course, in 2022. TECL took an absolute beating. So I don't know that you would necessarily be able to handle the stomach or have the stomach to hold through those periods, but if you did, these would have been the results. Now, speaking of making you all this money, what are we going to do with it? Well, I asked you on our community tab, at what age do you plan on retiring? And age 60 was the most common choice in my poll. And in the comment section, I mean, you guys just lit up the comment section. These are some of the comments that I had. And age 55 was the runaway winner. Seems like a lot of people want to retire at 55, which is sort of a magical age for our community in terms of retirement. Keep in mind, retiring early sounds nice on paper, but it can and does add an additional level of pressure to make sure that all that money that you've amassed for retirement inside your retirement plans, that you don't outlive all of that money. There's a lot of things that could go wrong just before or during retirement. And these are just some of the what I call financial icebergs. These are the things that could do a lot of financial damage in a very short amount of time. And if you're not protected, then your losses could be catastrophic. Things like inflation, things like skyrocketing taxes and tax rates, which are just ahead. I mean, the runaway government spending cannot continue. There will be a reckoning day. It's coming, and it's coming in the form of higher tax rates for all. How about a market crash? That's always a threat. Accidents happen, most of them. Well, just like accidents, the word, basically saying or indicates it's untimely. It never happens at a good time. And sometimes it can happen and can really be not just a health setback or put our life at jeopardy, but it could also be a major financial setback. And then, of course, illness, which is sort of connected to that. So all of these things are definite threats that we need to plan for, we need to be prepared for. Well, how do we do that? Well, as I've said it many times, making sure that your retirement portfolio has an adequate cushion. That's what I call a margin of safety. And I built this tool at ETF Guide that will help you do three things. It'll help you calculate, implement, and then monitor your portfolio's margin of safety. Go to ETF Guide, use the tool. It's going to fast track your quest for a safer, stronger, and robust portfolio that can withstand whatever future shocks that you may face. Two final things. I want to give you a quick update for 2024 retirement planning, retirement plan contribution limits. This is very important. And you'll notice here a couple of things. I want to direct your attention to those of us that are interested in Roth IRA contributions. You'll notice there's some income phase outs. And you know that I'm a big fan of Roth IRAs, Roth 401ks, and so forth. But just focusing on Roth IRAs, many of us make way too much money, and we're phased out. That precludes us from making any Roth IRA contributions. And so here's a tip. Check with your company, see if they have a Roth 401k option. Again, check with your company to see if they have a Roth 401k option. My general guidance is this: contribute up to the company match if you have one. That money is going to go into your traditional 401k, and then everything beyond the match should be deployed inside your Roth 401k. It's a much smarter move than overloading your traditional 401k money with lots of tax-deferred money. You want to go tax-free. That's why you have the Roth 401k. You pay taxes once and then you're done. And then you can also split your annual retirement deferrals between traditional 401k and Roth 401k, but your combined contributions cannot exceed the deferral limits shown here. So this chart, I think, is very helpful. You can notice there, if you're 50 or older, your contribution limit for 401k is $30,500. And these numbers, by the way, over the past several years have gradually risen. And especially if you're over age 50, they keep getting more and more generous, which means that you should definitely take advantage of them. One final exciting announcement is my latest ebook, 60 Smart Ways to Retire Better. It's available to all as a free download. Just visit the description section below to get your free copy. And that's it, folks. We are officially done. How did you enjoy today's episode? What questions do you have? What comments do you have? Hit the comment section below. I want to hear from you. I'm Ron DeLegge with ETF Guide. We'll see you on the next episode. Thanks for watching.